Hi everyone, this is Rob Roy and welcome to the Elliott Elite U.S. Market Update. We had a holiday shortened week here in the U.S. with Thanksgiving week, so not a whole lot happened, but a few things that I wanted to go through and talk about. Here's the chart of the SPX, and if you remember last week, we talked about this little triangle here right at the end of what was labeled as the Wave 5 top at that point in time, because that's all the data that we had. And we noted that with this little triangle, it could be the consolidation at the end of the Wave 5, or we could break back to the upside. And break to the upside is what we did. There's an old expression in trading, never short a dull market. In other words, if there's low volume, the market tends to creep higher. Well, when you're coming out of a triangle, it's not necessarily a creep, because you can see this big day that occurred for the breakout, but it just lends to the fact that an upward breakout out of that is not surprising. We had talked about we could go one way or the other. I wanted to show you how the volume works on these holiday shortened weeks, and this ties right into that dull market. On our Thanksgiving week, we have a full day of trade Wednesday, close on Thursday for Thanksgiving Day, and then Friday's a half day, so it only trades till 1 o'clock p.m. New York time. And here you can clearly see that there was not a whole lot of volume. Looks like everybody did what they wanted to do on Tuesday, because we at least had average volume there. Wednesday was very weak. Probably the traders came in, maybe stayed half a day, left around noon, and then Friday, being a half day, there was almost no volume for those that did bother to come in. A lot of people just taking the rest of the week off. So a very quiet week from a volume standpoint, and the move to the upside, not surprising at all. Last week we talked about the corrective patterns within Elliott Wave. A lot of people are taught when they learn Elliott Wave the 5-wave trending patterns, trading the 5th wave, trading the retracement from 5-wave completion back to the 4. But we also talked about not that many people are trained properly on the corrective patterns within Elliott Wave, and those are the flats, zigzags, and triangles. Well, last week we talked about the zigzag pattern, and we did touch a bit on the triangle. We had a real small one there, but you'll see much better examples over the weeks. But what I wanted to show you was in this chart of GLD, which is an ETF that mirrors and tracks gold, you see a flat here in this 5th wave of the Elliott Wave pattern. So we had the Wave 4 correction, and then we had, and these flats can be traded or can be formed in slightly different ways, but in general terms, they are a sideways, non-directional type of a pattern. For me personally, I'm not much of a sideways trader. I like to trade directionally. I find non-directional trading boring, but a lot of people like it. And so if you are a non-directional trader, then a flat would be a pattern that you would want to really spend a lot of time learning about and perfecting. And then there you can see where we have the support and resistance in that sideways trend. And then once that Wave 5 ended, note there's another zigzag, just like we talked about last week. The ABC is labeled there, an ABC zigzag for that Wave 5 retracement back to the previous 4. And that's what we know occurs. So we have a Wave 5 in. Where do we go? We go back to the 4. And it just so happened that we had a very nice zigzag pattern on the retracement. And in addition, we had that flat that I wanted to show you. So a proper labeling of this would be, there's your A, and then the B down here at the support line, and then followed by the C up there where that Wave 5 ended. So a nice flat pattern, and we can just go ahead and write that on the screen as well. So there's the ABC flat, and then we have the zigzag pattern again on the Wave 5 move back to the previous 4, and then off we go on whatever is going to occur next. So thought I would throw that in since there's not a whole lot of economic news, a lot of other things to talk about in the market this week, because again it was just such a quiet week. But there was one other thing I wanted to show you, which was the VIX. And note this goes along with it as well. When you have a quiet week, and the expression "never short a dull market." Well, there was no volatility. Look at that. Volatility just fell off a cliff for the entire week. But even with that, what was interesting is, we've had this long-term trend pattern here around 10 that we talked about, and then most recently, we've even dipped down as low as 9. We've highlighted that before, but note what happened on Friday. We tried to break below it, and it came right back above it, even on such a holiday-shortened day with very low volume. The volatility didn't want to break much below there. So the dichotomy that we're going to have coming up that we'll be watching for over the next coming weeks is what normally happens this time of year. Normally, you have that dull market, you get a bit of a creep higher, but is the tax package going to get passed in the U.S.? That's going to be something that money managers are going to have to weigh out, because a lot of money managers do have some gains in their funds. Now, are they going to do their tax loss selling at the end of this year, or are they going to wait and see if there looks like the tax proposal that's currently bantered about almost on a daily basis here in the U.S. Will get passed, and that taxes will be lower next year? So if that's true, there may not be any sort of volatility at all between now and the end of the year. However, if traders say, hey, I want to book those profits, and I don't want to just wait and risk that this tax deal doesn't get done, and then we could go into a corrective mood, and I give back a corrective move, and then I give back all of the profits. It's going to be very, very interesting to see how the traders make this decision. So it's something that they're going to have to make on their own, as far as whether or not they want to take their gains, book the gains, get their bonuses for the year, or wait till after the first year and hope that by carrying it over, they'll pay less taxes next year. So I'm going to be interested in seeing that. We'll talk more about that as we move in towards the end of the year. But again, quiet week here in the U.S. Things should resume back to normal this week, and we'll be back to talk to you again next week. Take care, everybody.